Okay, happy Wednesday, guys. You would have just seen me on stream, but we got Andre here from edgeful. Andre, if you just want to give a quick background, the guys should know who you are already. We've done
What's
plenty
up?
of these.
What's up,
But
guys?
yeah, we're going to speak about Marcus today. Go for it,
Yep,
Andre.
yep. So what's up, guys? My name is Andre. I'm the CEO of Edgeful. My background is in finance and accounting. I used to work at a top 100 performing hedge fund. I also worked at Goldman Sachs. I'm now the founder and CEO of Edgeful. If you don't know what Edgeful is, welcome. But it's a data analysis platform for day traders. So if you guys ever have a question about like how often does the day close green when we break previous day's high, or how often does price break both sides of the orb, or how often does a certain weekday close red or green, Edgeful is really the tool that you're going to use to answer those questions. So I hope that gives you
Sure.
a little bit of a background on what the company does. But yeah.
Yeah, we got stocks soaring this morning. I was just having a look at my edgeful screener. Obviously, majority telling me that we should be long buys 53 compared to 38.
Yeah.
Across the board. So yeah, I mean, we did break. We had a short chance for some shorts, and then obviously we started rolling over on grinding higher on NQ. Quite a tough long for me to take, especially with the extension yesterday. Personally, that's just my thought process on it.
Yeah.
But obviously, we did take out first another nice stat that I was looking at. On NQ and ES was we took out the previous day's highs, which is that white dotted line on my screen, and we did end up closing. Obviously, well, we'll see how we close today, but moving higher, you could have found a nice trade there. If we go to that previous day's range report, okay, and I think previous day's highs and lows, I love to have a look at. I don't know about you, Andre, but this is something that I'm
You
really.
have to. In
Where's it
my
there?
opinion, you have to.
Yeah, previous day's range report, and let's go to NQ, like this. NQ, okay, and we can actually see. Let's go to the New York Times. We can go to the extended market hours as well on this. But in the last 6 months, previous day's highs gets taken out. 68% of the time, we will close as a bullish closing day. So
Correct.
pretty strong statistics there. If you got any questions for Andre, make sure to put in the chat. But
Yeah.
any thoughts on current market conditions at the moment, Andre? Your side?
You know what's weird? I have actually been enjoying these market conditions. They are a lot more volatile
Yeah,
than what it's been like maybe even 2 months ago.
sure.
Ranges have been expanding, which means typically you want to size down, you want to widen your stops, you want to give the
Yeah,
trades some room to breathe. And what I've seen personally is that there is more consolidation, that you need to be a little bit more patient in these environments.
yeah,
So as we kind of see, you look at the equities, you look at like Google, you look at Nvidia, you look at Apple, like all, like maybe Amazon is the one that's like not really soaring, but everything else is kind of on this uptrend. But there's also a lot of uncertainty about like rates, about Jerome Powell, about like what's going to happen. Like there's a lot of uncertainty. Like, not that I ever honestly look at the fear and greed index, but it's at very heavily lean towards fear right now. But also the VIX. You want to look at more like volatility, you look at the VIX and you see that it's like really starting to spike.
yeah,
And if you want to just pull it up,
yeah. The
the
VIX.
VIX quickly. If you just go to a daily, I usually like to look at the VIX on a daily time frame.
Yeah,
Yeah, like so you see these like two larger spikes. The only other larger spike that we see is really in
April.
April. And obviously that was like a whole different story with like tariffs, but you have these two larger spikes, and when this happens, you can expect more like larger ranges and bigger orbs, and that's going to have to dictate the way that you trade. You can't trade
Right.
the way that you did in September now.
Yeah.
Right? So those are my
I
thoughts, high level.
I agree. I was actually mentioning to the guys on stream today that if we just have a look at ES and we go to let's put on the ADR at the moment, so average daily range on ES is currently trading at 57 points. So on an average day, ES will move 57 points on an average day. If we go to the beginning of November, okay, we got in the beginning of November, we can actually see that was down in the 20s. So
Yep.
wider stop, smaller sizing on futures contracts is definitely a must.
Yeah. 100%.
Yeah. Look, let's go like beginning. Like, look at this: 26 points compared to 57 now. I mean, that is more than double.
Literally, yeah. And if you think that you can trade the same way in November or earlier in November, or whenever the ATR was literally like less than half as you can now, like you just have it's just not correct. Like there's no one way to trade, but trading the exact, like not considering the different environments is a very big mistake in my opinion. Whether that comes to using position size, whether it's your stop loss placement, whether it's how far out you're going to put your targets. And one thing that the algos actually do really nicely. So we edgeful, for anyone who's new, we have 6 actually now. We have 6 algos, or it might be 5. It's 6 actually, or it's actually 5. It's 5. We just released one. We're in a few days. It's going to be 6. That's why I'm saying 6.
Yeah.
But what happens is the algos dynamically update based on the actual conditions of today, right? So we never have just like a fixed. My target is 25 points. It's always dynamic based on the actual current environment, and that's really important. That if you guys use any algos, that they are dynamic based on the environment. And those are the ones that we have are dynamic. So they will adapt as the market changes. So earlier, I think it was this week and last week, we were James and I stream on Mondays and Fridays, 9 a.m. to 11 at Eastern time. And he had his orb algo hit for multiple 100+ point trades on NQ.
Yeah.
Right. And that's because the ranges were expanded and that the algos are going to accommodate the expanded ranges and everything else. But it's very important to adapt to the environments, and edgeful is built for that. And so are the algos. So I just wanted to highlight that, because if you guys are struggling to adapt to these markets, you can rely on something like algos or the data, obviously, to tell you more refined information based on this environment.
Yeah, correct. It's been definitely, as you mentioned, you can't trade one way, now compared to the volatility that we're having compared to a month ago. It's different. You have to definitely size down. I mean, I'm interested actually in a short, possibly back down towards opening range high. We quite overextended in the last couple of days, and we're starting to find a little bit of slowdown. Maybe on ES, something like this, where we come up one more time and then we start to fall off like that. But we have to see. YM's been ripping. Any updates from your side, from the edgeful point of view, that we can maybe share?
Yeah. Let's pull up my screen quick. What I do want to do is I want to show you guys. So these are just quickly. I'm sure that a lot of you have. This has happened to you. This happens to literally everyone. Today, I took a short on NQ. Price popped out. I took a short, expecting price to reverse back to either halfway to the orb or that orb double break. And what I got was stopped out at literally to the tick high of day. Right at the time, before price continued higher, I was short. And I just want you guys to know that this happens to literally everyone, it's pretty hard to do exactly this, like to the tick is pretty tough, but it's going to be tough to do that. But like, there will be times where something like this happens, or something like this happens, or something like this happens. And like, if you just had moved your stop a little bit more, it would have been a green trade, not a red trade. And that's totally fine, because that happens literally to everyone. So I just wanted, if this did happen to someone today or this week, that it's not a big deal, right? It's not the end of the world. And I'll show you guys just here quickly too. Same thing happened to me on ES. So initially I had that short bias as price kind of reclaimed this orb low and consolidated and bounced off of this orb low. I was like, okay, buyers are stepping in. I'm going to look for longs. As price pulls back into the zone that I have, I'm looking to take a trade, enter long. Honestly, my stop looking back was probably too tight, but I was a little bit nervous because NVIDIA was kind of like rolling over at the time, and got stopped out literally on the wick, right? So if I zoom in here, got wicked out. This was like one of those candles that just drops and bounces back up. My order hits, I'm stopped out. It's not like I personally will always use stop orders. I don't just like leave it for me to close it. And then price just runs directly to my favor. Now makes an equal high, pulls back, and I'm like, you know what? I'm taking this trade again, because I think my idea is still valid, especially after this little rally that we had. And then I get my move up back to my initial target, new high of day, and a break of the IB, which is important. So if we go to that initial balance, you want to always expect price to break at least one side of the IB. In this case, I was expecting a break of the high on this day, today, and I'll always like front run my target by just a couple points. So this is like a couple ticks actually today, but I also left a lot of money on the table. I was not expecting a move like this. It's the day before Thanksgiving. So just to walk you guys through a little bit of the trades that I took today. Luckily was green. started out today red here, another red trade here, and then I used more size on this trade because I had a lot more conviction, especially after this bounce. But
Sure.
yeah, luckily ended the day green. But yeah, just to walk you guys through a little bit of my thought process for today on the trades. But
yeah, and I think obviously, I mean, the longs are obviously working quite nicely, but I think it took a bit of time to kind of develop, at least for me, you know.
Yeah, for sure. And it's just important to be patient in these markets because you like, I mean, some of these moves here, if you're long, like just this move on NQ is 50 points, right? Like this even from these 3 candles here are 60 points, right? Like this 1 minute candle is 47 points. This 1 minute candle is 18 points. Like these are very big candles that if you have a 10 or 15 point stop, it's going to be extremely difficult to survive through the environment, honestly, because the ranges are expanded, the volatility is higher. So my recommendation, size down and widen your stops.
Widen stops. Yeah,
exactly.
I agree.
Exactly.
So, I agree. Yeah, I mean, it is interesting because obviously we have Thanksgiving tomorrow, so markets are closed tomorrow. I'm not going to be trading personally. What do you normally do before Thanksgiving, Andre?
Trading wise, zero.
Yeah, trading.
I will not trade on Thanksgiving. I know the futures markets are open, whatever, crypto's open if anyone trades crypto, but I'm not. When the volume is very, very low, you get this like extremely choppy price action, and you get like a lot of fake outs, typically a lot of wicks, and you don't like if you're trading on Thanksgiving Day, honestly, like to be frank, like it's very like degenerate.
You should be spending time with the family. Go watch some football. Bro.
I mean, just even like in my opinion, it's very degenerate to trade on Thanksgiving personally, or on Christmas, or on like any of like the major holidays, the US holidays at least. I personally think it's very degenerate to trade those days because you're not like like the volume is much lower, the environment's much lower, like are much different, and I don't recommend it ever, personally.
Yeah, I agree with that. So go get some time off the desk, go get some time with the family. You can always come back and find moves on. And then Friday is also a half trading day, if I'm not mistaken.
Yeah, so you like typically don't want to trade these days, right? You don't want to trade holidays, you don't want to trade half days.
Correct.
When there's less volume, almost everyone gets chopped up, and it makes it a lot harder to trade. When there's more volume, it makes it a lot easier to trade. Moves are a lot cleaner. There's a lot less fake outs, and you want to focus on the days that have higher volume, especially if you're new, unless you have a specific strategy that works, or a specific trading style that works in lower volume, like more range bound environments, then you can have success in those. But honestly, like most people like to have a cleaner move, right? Like it's very rare that most people will get long here, target the IB high, and then hold through in this case, a 60-point move back in their favor. Sure. I guess it's not technically drawdown, but like if you're up, whatever, call it 100 points, and then price goes 60 points back, now you're up only 40 points. Like most people are going to stop here. That same thing applies. That's how range bound environments work, is there's a lot more pullbacks, and you just have to be a lot quicker, which I personally think makes it a lot more difficult to trade. But,
I agree with that. Any questions in the chat? I just put in the edgeful Discord that we are live now. So any questions in the chat? But you were showing me something, Andre, about the risk to reward ratio and stuff like that. Let's maybe cover a little bit of that side.
Yeah, one thing that I want to show just before we do that is, before we jump to the risk calculator, is the new what's in play. I know I've been talking about this for a long time. We are building it out. There's arguably like a million scenarios that we have to build out. Like, for example, before the IB forms, what is the what's in play going to look like? Once the IB forms, what does the what's in play look like? If the IB breaks the IB high, what does the what's in play look like? If the IB double breaks, what does it look like? What's the bias in this case? What are we displaying? What are we not displaying? If it double breaks, are we going to take it away? Or are we not going to take it away? Are we still going to leave it? And everything, like, there's like 2 million different variations that we've had to build, which is why it's taking us a lot longer to actually get this out. But I personally am super excited for this. And what it's going to do, as you can see here, is pretty much tell you it'll allow you to pick your favorite tickers. So Tesla, NVIDIA, ES, NQ, YM, RTY, Meta, whatever else. It'll allow you to pick specific reports that you want to look at, right? So if you have like a bookmarked reports, you look at the IB, you look at the orb, you look at the gap fill, you look at the outside days, you can pick all of those. And then now you'll know, based on any of the tickers that you select, what is in play today, right? So for example, opening candle continuation by weekday, 92% of the time is going to result in a green day. Your bias is long. Sure. Initial or whatever gap fill on Tesla, there is a gap up, but only 58% of them filled. Your bias is short. And this will be ranked in order of like the percentage here. And you'll be able to expand it, right? So the current what's in play, you'll be able to like view details. You'll see there's a gap down. Here's the gap size, whatever else, each of these live items. And you'll also be able to see the historical data for the report over here on the side. So you'll get the live data, you'll get the historical data all in one place in a way that's like ranking what you should be looking at.
Sure.
You'll also be able to filter for reports that have a result of a certain percentage, right? So if you want only 60 and higher, you can do that.
Nice.
So that'll be out soon. We're just working on building all the different variations. And then we have our risk calculator. This is brand new. This is something that I think is very important that everyone uses as a trader, whether you trade with the algos or whether you trade discretionarily. Pretty much what this is going to do, you put in your account size or your max drawdown. If you trade with the prop firm, you put in your max drawdown. So typically if you have a 50K account, this is a $2,000 max drawdown, you would put that over here. Then you put your risk per trade over here. And it will tell you how much of your account are you risking, how many consecutive losing trades can you take before you blow your account, and our recommended risk per trade based on your max loss, based on your account size, sorry. So it'll tell you, okay, this is conservative, this is moderate, this is aggressive, and this is extreme. So all the colors will change, it'll be fully dynamic. And this will give you like a true understanding of, hey, if you have a 50K account with 2K drawdown and you're risking $500 per trade, that's extremely aggressive. It's extremely, extremely aggressive. Like you cannot risk $500 per trade with $2,000 of drawdown. So this is what will show this will show you that. Then based on how many consecutive losers you can take, will tell you what type of win rate you need and the percentage chance that you'll blow your account specifically from consecutive losses. So for example, right here, you can see probability of blowing your account based on different win rates. The chance of taking 10 straight losses with a 40% win rate is 65%. So there's a 65% chance that you'll blow your account if you're risking, in this case, whatever, call it 10% of your account per trade, right? If you have a 40% win rate. Now, on the other side, let me just take a step back. If it requires 10 consecutive losers to blow your account and you have a 70% win rate, there's like practically no shot you're going to blow your account, right? Because you're risking a very small amount and your hit rate is very high. So in this case, you can see that there's only a 1% chance that you're going to blow the account, and you're going to get it from this chart over here. So this is something that I'm very excited about. We're obviously going to improve this over time. Like we're going to add in the ability to actually pick like specific tickers and the point values of each tickers and how many contracts you want to trade and everything else. But like in the beginning, we want to keep it super simple. This will actually be out pretty soon, I'm hoping. And probably like for sure by the end of this week, I'm assuming. I know that it is already in the process of being built, but something very simple for us is just to give you guys like some more value, some more resources, and the ability to actually go through and say like, hey, this is actually an aggressive approach.
Yeah.
It's a very aggressive approach where if I have a 50K account with 2K, or call it whatever, I have $2,000 of drawdown, I can't risk $500. You can't, because that only gives you 4 trades. And this will show you that. So you would need a win rate of like over 90% in order to have success with risking 25% of your account. So this will show you that pretty much. That's the way that it will work. So this is one of the cool things. Yeah,
that's pretty neat because I think most traders don't understand that.
Yeah, and this is hopefully like a simple and easy way to actually like visualize it. right? All these colors will change. So conservative is obviously green, but if you change this to be like 10% of your account or 25% of your account, all these will turn red, and you'll be able to obviously see, like, don't do this. It'll be pretty obvious. So that's what we're trying to do here, is like trying to help traders with their risk management in a way where we're not telling them like exactly the position size they need, but giving them more guidelines.
Yeah, no, I like it. Any thoughts or any questions in the chat? We have I have mentioned it to the guys over here. Any questions? Put in the chat here. Okay. But yeah, I do like that person, because I think most traders, that's where a lot of traders do get it wrong. They mess up the risk. You know,
yeah, of course.
With $2,000 of drawdown, you can't be risking $1,000 per trade.
Yeah, and I think that they know that, like, intuitively, but you just need to see it sometimes. You need to see, like, there is an 85% chance that I blow this account.
Sure.
Like, if you know that, like, it's much harder to take those trades when you know, like, hey, there's an 80% chance I'm going to blow this account if I do this. Okay, maybe I should size down. Because you don't really know. Like, everyone just kind of has this like vague, like, whatever high level view of trading. They're like, yeah, but if a 2-to-1 risk to reward or whatever, like, they start to just really go off the rails, I think. But yeah, I think that this will be really important for people. Yeah,
I agree. And I think we kind of also explain this on our streams on Monday and Friday. So for those that don't know, Andre and I do stream Mondays and Fridays, 9 a.m. Eastern time, live here on my channels and the edgeful channels as well. So make sure you tune in for those. We'll be live on Friday. I don't know how long we'll go on Friday. We'll probably go to 2 hours, but it is a half day on Friday. So please bear that in mind. And then stock futures markets will be open tomorrow, but I personally won't be trading any of that noise personally.
Yeah, I'm definitely not trading today. If my algo goes off tomorrow, I'll be closing it immediately. I won't be allowing it to trigger tomorrow for sure.
Yeah.
I don't want to. I would be pretty upset if I took a larger loss on a day that I know I shouldn't be trading. So
has lower volume.
Yeah. Those are my thoughts. And if you want to leave it, you can, but I just personally don't recommend.
Yeah, I mean, you could turn it off on that day, right?
You can turn it off. Yeah, you can just you can pause the alert, but just guys remember to turn it back on, obviously.
Yeah. Otherwise, it won't be taking off that. So
exactly.
Yeah. Okay. Yeah. So as I said, like, we'll be live on Friday. I think we've covered quite a few things today. We'll be live on Friday, so catch us there. We take trades live based on the edgeful data, backtested data. Giving our thought processes on why we are taking certain trades. You guys can come there and learn from us. There has been we've been getting quite a few people watching us, so
which is sick. And the streams, guys, put your notification bell on YouTube, like on the streams, on the edgeful account, on James's account, on our Twitter accounts. Like, make sure you tune into those streams. Honestly, like, I don't want to say that like this is going to be consistent forever, but like we've honestly been calling like some pretty great trades, like talking about our structure, talking about like the thought process around it. Like the trades that we've been taking have been very, very, very solid recently. So yeah, if you want to like see how we apply the data to our trading and also call out these trades and like the logic behind them, like why we are targeting certain areas, why our stops are in certain areas, you'll be able to see that all live.
Yeah, exactly. So, I think that's a big benefit. It's all live for you guys to see in front of you. And so we'll see you guys Friday. Have a good rest of the trading day. Take it easy and take the tomorrow off, and we'll see you on Friday. So get some rest, and we'll see you guys there. Cheers.
For sure. All right, guys.